All right, welcome everyone. There we go. I had my mic muted and it should be all good now. So let me know if you guys can hear me on YouTube and on Twitter. I'm just going to make sure that everything is up and running. So I'm going to go over to the RomXPT Twitter page, or the X page, and make sure that everything is up and running. We're also going to be joined shortly by Rudo, the chart artist, and I'm gonna give you guys his Twitter profile right now in the comments as well, so you can go and check him out and give him a follow. Rudo, let me know if you are ready to be added on stage. All good? Yeah, okay, let me get that. What's up, Rudo? Welcome.
Welcome. Well, I'm the one doing the talking. I'm saying you welcome. Hello, everybody.
We can welcome each other. Welcome, Rudo.
How are you guys doing? And how are you doing, Jonathan? How was your weekend?
Weekend was good. I was busy. I said that on Friday. I said, "Oh, it's so nice to be, taking the weekend, spend time with the family." But then I had this idea, and I started working with Claude Code. And when you start working, you go on into this rabbit hole, and
you never leave it.
AI today is just absolutely amazing. How about you? Had a good weekend?
No, I really had I had an amazing weekend. So well rested, ready for the week. Mondays are typically research days for me, research and charts. So I don't really trade much on a Monday, but it gives me a good foundation to just get into, the mood for the week. We're trading what other people are thinking about what we are seeing in the market. So it always pays to just let them make the decisions first and then go and trade what they decided on.
Definitely. I like Mondays for me is at least in the markets, it's a little bit slow. I did have a breakout on gold. I took a trade here on gold, which I like. Let's see if I can just remove these ones right here. And I don't really trade very often, so it's nice to be able to get into a trade in the beginning of the week. Usually, I try not to trade Mondays too much because I see a lot of times that the moves that we get on Monday, they tend to reverse on Tuesday or maybe on Wednesday, and then whatever moves we're getting on Monday, it kind of gets reversed, and then the real move happens. So it's going to be interesting to see what happens here on gold, but we did have some interesting developments over the weekend. I'm not a macro analyst or a fundamental analyst, but there are obviously a lot of things happening right now that is driving the price of gold. We have the tariffs, the Supreme Court, I believe, in the US turned down, or not turned down, but they ruled against Trump's tariff. Yeah.
And now he's launched new ones, as I understand, new emergency tariffs.
Yeah, 15% like blanket tariffs or something. And then, of course, we got the US-Iran situation. There's a lot of mobilization happening in the Middle East right now. So, interesting to see what happens there. Of course, if there's further escalation, gold will most likely rally. And we have some sort of ascending triangle here. And you guys saw I had the measured move on this one. Now, to be fair, this is not a traditional ascending triangle, because usually ascending triangle, you have the entry from below, and this time we have the entry from above. So it definitely changes the probabilistic nature of this, but it doesn't really matter because now we have the breakout. So we got the breakout above the level, and now play, and then the fact that the measured move kind of aligns nicely with the previous all-time highs here, that's that's what I'm going for. So I bought this breakout and I'm looking to take profit somewhere up in the 5.5K region, somewhere around here. Hopefully we'll get some continuation now throughout the day so I can secure this trade. Guys, I posted Rudo's link to his Twitter. Make sure that you go and give him a follow. Very, very much worth a follow. Posting some really good content, really good technical analysis, and gives his opinion on the markets.
Thanks, buddy. Appreciate it.
So what are you thinking here for? You know what I want to see, because we've had these X spaces for a long time, and you've been saying a lot of interesting things on Bitcoin, but I want to see it visually, you know? Okay. So I would love to, I'm going to pull up your screen here and see if we can see what you're working with here.
Okay, bring it on. Let's go. I see there's a couple of comments here. Am I from South Africa? Yes, I'm from South Africa. And let's see what else. Hello to every one of you guys. Hello. Let's get the momentum going in this chat while we're in there. I like to talk to people and not at people. So rate your day. Give me a triple whatever. If it's a 1, if you're not in, and I mean, Jonathan, you will probably be a 777, 999 somewhere around there, because you're in a gold long right now, looking good. So let me know where you guys are at. I've got my eyes on the comments. For a change, I'm not the one pressing the buttons, needing to do multitasking like Jonathan needs to do. You can see he's busy. He needs to monitor everything. I can just sit here. And
nice, isn't it? Just being a guest isn't it's pretty nice.
It's relaxing, I have to say. Okay, let's get to my charts, guys. Okay, so I like to look at the market from a macro point of view, just to give me an idea of where my bias needs to be. It's very easy to fall into a bias paralysis. Now you want it to be bullish, so what do? You just see bullish stuff on the chart, and so what I do is I start off by doing some research, or it's just where we are macro wise, and this is now where my charts can become very simple. What we have here is the global liquidity. We've been talking about this for forever. Now, I know that, you know, where we were in Bitcoin, in the beginning of Bitcoin bull market, everybody was exceptionally bullish. Now, if you look at the dates, I mean, this is 2023, 2022. This is a weekly time frame. These are very high, you know, this is a very high time frame analysis. But what is striking for me regarding buying the dip right now, to try and see where I'm at with that emotion, is if we look at where we are within the last few years within this, you know, we have not been trending in a decent uptrend. We've actually made a little bit of a correction and an uptrend now. Now, this correction was in light of quantitative tightening, meaning the Fed reduced the rates. And as of, you know, September 2023, roughly around when Bitcoin started bottoming out, there was an increase, and there is an increase in the global liquidity. Now, what is this chart, you might ask, before we go on? So you've got your M0 chart. Now, your M0 is an analysis based on what people have available in their banks to spend right now. Your cash flow, free money at the end of them after you've paid your, you know, all your bills and stuff. Then you've got your M1 money supply, and that is money that you'll probably be getting in your credit cards and stuff. So it's still money you have access to right now, but it's lines of credit, overdrafts, these kind of information. And then you get your M2, which is money that you will need to, at least, it will take at least a day or two for you to get access to. So that's money in your second bond. You know, it depends on where you are in the world, or how you're going to be, you know, how you're mortgaged, as they would say. So this is money that you will have access to that takes a little bit longer to get to. Now, why do we look at this? Well, simple. If I'm saying somebody's going to be buying the dip here, the argument is there needs to be money somewhere. They need to have cash to buy the dip. And the funny thing here, Jonathan, this is what we were on about last time we were on. We barely made a higher high this time round. And when we start layering the Dixie, this is now where it gets interesting. Typically, we were saying that the Dixie and Bitcoin is inversely correlated, which means when the Dixie goes down, Bitcoin goes up. That's a sentiment indication. People don't trust the dollar, or people don't need the dollar right now. They've got an appetite for risk. But recently we found that when that happens and you've got Bitcoin, the Dixie goes down, Bitcoin goes down as well. So we have broken the correlation. And the funny thing is, why have we broken the correlation? Because at that stage, what did we have? We had divergence. We didn't have more money in the markets, though. We were below where we were in 2022. And that's the thing. So although we have the Fed pivoting right now, my sentiment is a little bit different. I am saying clickbait-wise, Dixie's going down, Bitcoin might pump. But in all fairness, the fact that the dollar is going down, it's just trying to prop this up. And it's not necessarily people having buy the dip money. So to let that run and marinate a little bit further, we were always talking about this chart, Jonathan, and this is the Federal Reserve rate in relationship to crisis. So what we've seen over the years, and I mean, you can go and check this out. Every time the Fed decides to change the monetary policy, pivoting from increasing the rates to decreasing the rates, it is seen as a bullish thing, because now Joe Public, the M2 money supply, immediately is going to give him a relaxation, meaning the interest he's going to be paying on his bonds and loans and stuff, that's going to be less. So thank goodness I'm going to have cash free. And normally what then happens is, in light of the Fed pivoting, you'll see that the stock market rallies, because everybody sells you on the idea that everything is still okay. And normally, after the Fed pivots, there's a recession. Now, JP Morgan came out with an article. I don't have it open on the screen for you guys right now. I do apologize, but saying that they've given it a 39% chance for this year that we're going to be experiencing, or that the US could go into a recession. Now, how does that work? Well, after the pivot, there was a recession in 82. It was called the Continental in Illinois. I don't know what the crash was, but basically there is oil crisis. Let's use that. Then we had the pivot at 87, savings and loan crisis. The market rallied. So the pivot, the interest rates, the black line. Stock market, S&P 500 is the red line. And the gray bars, that's recessions. There we had another Fed pivot, followed by a recession, followed by the stock market crash, the dot-com crash, probably the easiest bubble that we have to compare to where we are right now, the crypto space. Then we had the credit crisis in 2009, the banking, the big short movie that happened around that area. Then we had the COVID crash with a little recession there as well. And the big question is where we're at right now. Now, the problem that we have on the macro side of things at this stage, so if I have to look at this chart now and say, okay, where we're at right now, the Fed has pivoted twice now, has reduced the rates. And we've got a debt crisis coming our way, because what is happening now at this moment, when we look at the US GDP to debt ratio, it's sitting at 121%. It means all the money the US makes, not even enough for the debt they have. And the refinancing of that debt is due now, which means if you've got a company that had borrowed money to grow, to expand, let's make a simple hypothetical here, and you had an interest payment on your debt for about, say, 10 million. That was financed at 1 or maybe 2% back in 2001. That's due now, so they're going to have to refinance if they can't settle the loan. And that refinancing at this stage is going to take that interest that you had to pay for $1 million, let's make it $1 million a year, is now going to be 3 times that perhaps. That is why Donald Trump is trying so hard to bring the Dixie down. And that's why the correlation between the Dixie and Bitcoin has broken somewhat. Because if he can bring the dollar down, that will force Powell to bring the rates down, and that will help prop up the economy. The reason stock markets is rallying is clearly evident of the fact that the dollar is losing value, not so much that the stock market's going up. So the NVIDIA returns, I think, tomorrow might be interesting for us to see whether we're going to really have a prolonged rally. So that's the macro of things. Now, Jonathan, I don't want to hijack and just talk too much, but you also said I need to explain the cyclical nature of my analysis. The 4-year cycle. Let me just quickly find that chart. Let me just expand this and minimize some of these things.
You have a lot of tabs. A lot of tabs.
I have a lot of tabs. So finding something can sometimes become crazy, but I'll get it. I just need to find the right color. Or I've closed it. Let me just quickly open it. I might have closed it. Maybe let's open up if there's any questions, anything and maybe if you've got questions while I quickly find the chart.
Well, I like the idea here. So two things, the disconnect between the inverse correlation here between the dollar and Bitcoin. So you're saying that because of the fact that Trump really wants to have a cheaper dollar so that when it's time to refinance, it's going to be cheaper, basically. He's pushing the dollar lower. And because of that, it's we're basically saying without that, the dollar would be higher, right?
Correct. So the manipulation at this stage is on a level to try and get that interest rate to pivot, and not necessarily money. Because remember now, the global money supply was showing us every time the DXY was going down, we had a global money supply that was growing up. So people had cash to buy the dip, hence the fact that we could afford to be bullish on lower areas. There was a risk on money. But because we're sitting in a situation where you can clearly see we're barely making a higher high, we're still going up, but it's definitely slowed down. The dark blue line you can see has definitely slowed down. It means the fact that the dollar is dipping. It's not necessarily risk off anymore. It is money trying to keep propping up this global liquidity supply. So it's not free money in your cash in your bank account. It's manipulation trying to just keep the picture pretty so that the rates can go down, so that the US debt doesn't cripple them, because there's a massive trade war going at the moment. And that's why we're sitting in a situation where we've been expecting Bitcoin to honor its correlation with the DXY being the light blue line on the chart and Bitcoin being the orange line on the chart. DXY goes up, Bitcoin dumps. DXY goes down, Bitcoin pumps, But now it's been the opposite. They've been on harmony. So that's the problem that we've experienced now. And that's where we're at with this. So does that make some sense to you?
It does make some sense. Okay. Looking at the money supply, it's the issue I'm having with the money supply is that it just keeps going up. It's kind of difficult to do analysis on it, but when it's just it keeps going up. But I guess you have to look at the
momentum is slowing up. So the fact that it's going up is not necessarily the thing. It's the momentum is slowing. And if you think of it like that, what is divergence in the end of the day? It is something that keeps going higher, but momentum is pointing to an unsustained condition. And that's what the global money supply is showing us. It's not that it's going up at this all-time highs, but it had its first sell-off. We've been in new. There's Bitcoin at the previous all-time high. Look at where the money supply was at 21 trillion. Bitcoin went and doubled that nearly. Money supply is barely making a higher high. So the question is, all that additional Bitcoin that got into the system, if the global money supply barely went any higher, who is buying the dip? Where's the extra money to keep driving the adoption? And that's the big question mark that this chart is pointing to.
Yeah, no, that makes sense.
Okay, let's talk about the 4-year cycle, if we can quickly do that.
Yeah.
So the 4-year cycle, people say it's dead. I say it's not dead. I say it's healthy. But you need to look at this. This is now the way that I've been monitoring this. Maybe I'll scale it to the monthly time frame just to make it a little bit easier on the chart. There's a few things that we need to understand. Obviously, the stock to flow model that what was this name? Plan B created. the
I think it
spirit
was Plan B. Yeah.
cycle. And kudos to the guy for what he's done. So I'm not taking any credit for this in that regard. But what I am doing is I'm saying, okay, Bitcoin started somewhere in 2009, and then there was an all-time high. That first all-time high was at $37. Now, this chart doesn't have that data, but that's the line. You can go and fact check that. And then from that point onwards, we made a low. And then obviously we went through our first halving, which was in 28 November 2012. And then from that point onwards, Bitcoin rallied, made an all-time high, came back down, and then the halving idea started. What if the next halving happens and we get a new all-time high? And it did that. And then what if the next halving happens and we get a new all-time high? And we did that as well. And the last time round, we had a new all-time high. So that's the basis for the idea behind what if we can lay a time to this and see how the price for Bitcoin reacts between the halving times. So the tool that you use would be the time-based Fib tool. There it is on TradingView. So if you click on that, it will give you 2 points, your starting point and your end point. And then what I do is I switch everything off except the 38.2 and the 618. Those two timelines, being Fibonacci levels, are significant. Now, here's an example of it. 38.2, 618. So the 38.2 is a blue line. The 618 is the orange line. And those are the blue and vertical, the blue and orange vertical lines on the screen. So we've got the red lines showing all the halvings, and we know when the next halving would be, roughly, because it's 4 years into the future. And you can go to any of the, what's that website where you can pick up the next halving time. Bitcoin's halving. There's a website. I mean,
I think it's as good as Google Bitcoin halving time, I think.
Yeah, and you can get the website there. But in any case, it's roughly in March 2028 again. So it might be April, might be March, but it's going to be roughly within that time zone. So now if we apply the time for between the two halving dates, as you can see, there's an interesting pattern that emerges. Around the 38.2, you reach the top. Around the 618, you reach the bottom. 38.2, you reach the top. 618, you reach the bottom. 38.2, you reach the top. 618, you reach the bottom. So when you were on my YouTube back in October last year, we were at the 38.2 level, and Bitcoin was at 125. And that's why I said I'm calling it, because we reached the top on the time basis between where the next halving will be. And I will only be bullish again, although I do take things level by level. I don't just use this analysis, but I will be bullish again when we reach the bottom or when we are around August this year. And that's the 4-year cycle based on time analysis. Very simple. And you can do it by counting dates or days or weeks, but that's basically the whole idea. I see you've got the nice hash website there. Thanks. And
I think that's one. Yeah, that makes a lot of sense. I mean, Bitcoin is. From what we know from the history of Bitcoin, it goes through these cycles, and just because we have people saying this time is different doesn't mean that it has to be different, right? So what we have is a very cyclical nature of this market, and I think it's better if we can just follow that cycle until it's proven not to be as effective anymore, or we see signs that it's actually deteriorating. And I think we are seeing signs that the momentum of Bitcoin, obviously the volatility and the momentum of Bitcoin is starting to normalize, and we're not going to get the same type of explosive markets that we had, in the beginning of the history of Bitcoin. But it's probably, I'm not going to say probably, but it is following right now the cycle like almost perfectly. So I don't think it's a time to trade it any other way.
The trend's your friend until it bends, guys. And in the end of the day, we try and trade the emotional market cycle. And in all fairness, that doesn't change because we as humans, our greed, fear, that has not changed. And unless we evolve and become AI, the reality is when something goes through the cyclical nature, we can look at it. I mean, Ray Dalio made an amazing video about the cyclical nature, about decentralized versus centralized societies. It takes 360 odd years for us to pivot between that. The last time we had the Renaissance, before the Renaissance, we had, and so forth. We are now, we are very centralized again. And then we get fed up, we overcorrect, and then we pivot in the other direction. He also explained every 150 odd years, there's a financial revolution. Funny enough, all those things are lining up right now. Every 30 something odd years, there's a technological breakthrough. With the last one being the internet, and now being Bitcoin and blockchain, and securing data on the internet. Only time will tell if that is in fact the breakthrough, or maybe something new. But that's the cyclical nature of things, and all of those things tend to still follow emotional market cycles, and that's why Fibonacci ratios still works, because it's just a mathematical equation for measuring where we are within our emotion cycle. That's all.
Yeah, no, it's fascinating. Have you what is it called? The book Fourth Turning. Have you heard about the book Fourth Turning, or the concept of that?
The one with 80 years. Every 80 years we go through a quarter, and we're in the fourth turning right now. I actually speaking to somebody about this morning. I haven't read the book myself, but he gave me the gist as well, and that beautifully lines up to this.
Yeah, it's crazy. It's it's a book or concept, a book written in the 90s by William Strauss and Neil Howe, and they wrote. I think the first book is called The Fourth Turning, and then the second book, written by Neil Howe after William Strauss passed away, he wrote a book called basically called We're in the Fourth Turning or something like that, and it aligns very nicely with what we're seeing right now with AI and everything as well. But interestingly enough, I mean, that doesn't really align. It doesn't really have anything to do with the Bitcoin cycle or the Fourth Turning. But it's interesting though, because if this truly is the Fourth Turning, then in the next couple of years, or could be 2 years, could be 10 years, really. So we don't really know. But if history, I mean, history rhymes. It doesn't really perfectly repeat itself, but if it's going to rhyme, then the crisis that we will inevitably go into at the end of the Fourth Turning could mean that we're going to see a situation in the world and in the financial markets that we haven't seen since before the inception of Bitcoin. So it might actually give Bitcoin a completely different market structure to be in. We've never seen this. And what's interesting with the fourth, the halving cycle for Bitcoin is that the top that we printed, it aligns with the previous tops. I think the average, by my calculation, the earliest top after halving was in summer of 2025, and then the latest top after halving was in October this year, with the medium being around December 2025 or something like that. So we're still aligning very well with the average top, like the time that it takes to form a top after the halving date aligns perfectly with the cycle theory here. What I'm seeing is also that the rate of decline is slowing for Bitcoin in the bear markets. The parabolic runs after the halving has become shorter, and the rate of decline is also slowing down, which means that overall volatility of this asset is shrinking, which is basically in portfolio management terms, you would call it beta. When a financial asset has high beta, it means that it moves a lot. if you compare it to benchmark. And Bitcoin's beta has traditionally been very high. It's still a high beta asset, but we see that the beta for Bitcoin is significantly being reduced.
Wyckoff has a very interesting theory or tutorial around the way that you can measure that on the chart. Do you want me to quickly explain that?
Yeah, that would.
Okay, guys. So, Jonathan, you still there? You broke up, or is it my internet?
I'm here. I'm here.
Okay, cool. So I've got Bitcoin now, and obviously this is a logarithmic chart, so there needs to be a little bit of a discretion be used. But I mean, I can probably switch this to a normal chart, and we can move, but it's just going to be a lot of panning. So let's do it on the logarithmic, and then we'll keep it around that. And Wyckoff basically says that there's 3 ways that we need to look at how momentum impacts. The one is we need to compare the highs with the highs, and then we need to compare the lows in relationship to lows. But then we also need to compare how they are sitting in between them. So the best way to say that is, if this is a high and this is us making a higher high, the percentage of that would be equated to say a value called X. And if this is the previous high and that's the high, the value would then be, or let's say that would be, say, 3x. Then this would be 2x, for an example, and then this would be x, which means the highs, the amount of percentage gains, is slowing down. That's how I also look at divergences in relationship to that. But that by itself is not necessarily the end. The worry that we need to do is how deep the retraces are. Now, as we go through with these retraces, this then gives us an indication of how bearish we need to be. We want to be measuring the depth of these moves as well. And if that is, say, X, how deep was this retrace? Roughly about X as well. And how deep was this retrace? Maybe just a little bit then less than X on the percentage of this chart. So the argument is, if we are losing or slowing down on the highs, but maintaining the depth of the retraces, should we now start saying 60 is the bottom, or should we be worried that the deeper the retrace this time is going to be deeper? Because if the trend is anything, this then brings us to that scenario where it can go to 30 or even as low as 10, based on what would X be on this retrace. Now, the third avenue is to obviously look at how deep the bearish perspective would be, how much strength the bears have until it passes through its next high. So when we measure it from that point of view, we also want to see whether the rate to where it gets bought back up is getting stronger or weaker. And when we do that, we can see that the rate that it's being bought up as well is getting weaker. So we're getting deep, we're getting the same amount of retrace, potentially, get less highs, and the rate that it's being bought up is becoming less as well. And that then questions this whole idea that everybody's saying this thing's going to be at 200 and a million and, but in all fairness, the momentum is slowing. Now, the reason I'm explaining you guys this is how you can easily navigate getting out at the top or a bottom. So the chart that I want to show you is this chart. So I'm going to just go to Bitcoin weekly time frame. This is a clean chart. So maybe I must use let me use this chart. This is a completely clean chart. Let me just get it. Give me a sec. I'm almost there. Any moment now. I'll get the right one. There we go. I've got it. So this is now a little bit of a contrast. I'll go with a white screen, so it's just nice and clean, and I'm going to go weekly chart. So if we look at this and we look at the momentum, now everybody knows how divergences work by now, or if you're a trader, you understand the principle of a divergence. So you don't need to have a fancy tool. You can just use a normal RSI for that matter. And if we look at the RSI at this stage, every time we make strong bearish divergence, the argument is, are we staying above the original pivot, or are we falling below it? have a look at this time around. And maybe what I need to do is just, I'm going to leave it on the weekly just for that sake. There we had divergence. What did price do? Price stayed above that pivot, that originating pivot. Okay. So we held as support. Then what did we do? We made another higher high with yet again another divergence, and price tried considerably to stay above it. So we didn't open and close a weekly candle below it. We did trade below it, but we didn't open and close it. And then what we did again is we made yet again another higher high. So there would be a new pivot. And there we lost the momentum based on the Wyckoff principles. Sell off. Now, what happened here? We made another higher high, a bigger time frame divergence, because remember now the timing of our analysis had us there at this stage. We had still a little bit more move to do. So we were not at any stage ready to be there yet. Now I need to remember where this chart is again. I'm going to get it again. Maybe it's just next to it. Let me just see, where did I now hide this one? There we go. Okay. So what we did was we've had divergence again. Price fell below that pivot. That's when you worry. It's not that you have strong bearish divergence. It's a bullish signal in all fairness. It is the fact that we lose that support that we need to worry. Now, if we fast forward to where we are today and what happened, we had the same thing. You had your initial divergence. Around this area, people were maybe technical analysts normally become bearish. They want to short and say it's bear market. But we had time, which our time analysis pointed to this being the time where time runs out. And then we had strong bearish divergence on strong bearish divergence. And every time we stayed above the pivot. But here we made a higher high and we immediately traded below it. Here I was bearish. I'm going to be honest with you. Then it went higher still. And because we were at that time zone and we had strong bearish divergence and we sold off, those were the weeks where I said, if we don't get above 119, it's over, because now we've got momentum slowing down. We've got support being lost for the first time, the real support, the important support. And you've got the time analysis pointing to price being against you. Now you worry. And here we're at. Now we talk buy the dip. The same applies for buy the dip. There was strong bullish divergence there. There was strong bullish divergence there. But once we had the weekly analysis on strong bullish divergence and we reclaim that level, that's your buy. And as traders, we know we don't want to be hunting tops and bottoms, because that's, if you scratch your bottom, your fingers smell. You want to wait for the divergence to play out, and then you want to get into the meat of the move. And that's the same. You want to get in on the meat of the move, and you want to wait until it turns, and then you want to get in and drive the meat. And until we have weekly time frame saying to us that we're over, with price doing this on the RSI and price going lower still, your bet would be to be and to remain bearish. So now we've looked at this thing from a macro point of view. There's money, but it's not that crazy money as we used to have. We know the reason why this money is not going to Bitcoin at the moment. It's just trying to prop up. It's to get this GDP to debt ratio down. Let me just get to that chart where I hide that. There, it's try to get that down, because that refinancing is a reality that we have. And the worry is that this time around, this crisis could potentially be the debt crisis. Because if all those financing comes through, and people and companies that used to make X amount of profit now need to pay 3 times the amount of interest, that's going to have a knock-on effect on everybody. That's what the recession is in the end of the day, is now we were making profit. Nothing has changed in our operation, but because we're paying higher interest rates, we're not making profit no more. And I mean, what Morgan Stanley, Goldman Sachs, they had a venture capital business go broke because of refinancing. I don't have the articles here as well. That's a reality that we have, and that's what nobody's telling you. That's what they're keeping below the wraps. So you've got all these things pointing to the perfect storm of more bearishness. And I know we want to be hopeful, because I'm talking relief rally now. I want to see a little bit of a rally, but that is because of the options expiring. So if we look at the options sitting right now, we've got, let's just see if it's going to load. We've got about 2 billion in Bitcoin that's going to expire tomorrow at around 70,000. That's the max paying price for that. So it's no reason, no secret why the funding rate has now flipped negative. They're trying to attract longs because those guys are going to have to pay out hefty fees if that expires. So max paying sitting around 70. So the anticipation, there you have it. The anticipation is that Bitcoin is going to be going up on the short term. And even later this month, the max pain sitting around 85. So this relief rally could blind people even more, saying that finally, this is now the time and we're going to go to the moon. And they're going to that's going to avoid them from selling the relief bounce, because that's typically what happens when you look at the emotional market cycle, this complacency part of things, where people are saying, no, it's going to go make a higher high. You know, the mechanics driving that pump is not necessarily demand, which we can clearly see. People don't really have more money. It's the people betting on the side that's being squeezed out that's driving price up.
Yeah, and I think we talk about the macro conditions and liquidity and all of that, but all you really need is, I mean, the chart that you see right here, the psychology of a market cycle as well, is very it shows pretty much everything you need to understand, because, and you can remove all the text from this as well, because when you've been in the market for as long as me and Rudo, you can remove all the text and you can look at only price, and then you'll understand where you are in the cycle. And what we're seeing right now, and I'm going to switch over to my screen quickly here and just show you what I'm watching. What I'm watching for Bitcoin right now. Now, a lot of people might look at this and say, okay, we're hitting a good support area. And that's true. That's true. We're hitting a good support area. It's factual correct that we're hitting a good support area, because it's simply just what is the support then? What is the support area? Let's use the horizontal level that is indicating that there's either supply or demand in that area, or there has been supply or there has been demand for Bitcoin in those areas. And obviously we've seen that here. There's been a lot of resistance here in the history of Bitcoin, and then once we had a very big consolidation phase right within this general area, and the breakout above this level had one of the strongest move we've seen on a weekly basis on Bitcoin. And now we're down at that level again. But just because of the fact that we're at support doesn't mean that it's a long-term bottom. Yes, it's a good support. It's a good a historic support as well. This was also a very good support, and that's why we kept above this level for a certain period of time, and then we fell below, because
not all levels always create equal at all points of time. That's basically what you're showing, because 69 was a resistance, and then until it was support. And the market has a memory. It has that that way. Well, if this isn't a great deal anymore, it's going to fall back to its previous point of safety. And that's why you have that support situation right now. But the question is, as we won't know, is the support going to hold?
Yeah. So for me, I feel like it's the way I analyze the market is it's similar to Wyckoff, but it's much simpler. Basically, what I do is I try to think in terms of accumulation and distribution according to the Dow theory. Now, Wyckoff talks a lot about the psychology of the market participants as well, while what I look at is simply I simply look at the structure of the market, look at price, and then I look at the momentum of price. You can see, for example, a clear example of that here on the weekly is if momentum is one-sided and it keeps going, you want to be like in that trend. You want to be in that move until that momentum shows signs of slowing down. So for example, here you can see that the momentum of this move is slowing down, right? It is slowing down as it's approaching this level, and that's a good sign that this is a strong level. There seems to be some demand for Bitcoin here. But looking at the market structure here, I think it's very clear to me that this is distribution. I mean, in hindsight, it's always very clear what's distribution. But to me, this is
never.
yeah, I mean, this is distribution right here, and this is accumulation, and then this obviously distribution up here. But then you have to ask yourself, okay, so if this is the long-term bottom for Bitcoin, then this has to be accumulation. And I just feel like looking at the cyclical nature of Bitcoin, there's no way this is accumulation to me. There's no signs of this being an accumulation, not even on chain. So what I'm looking at is if I apply the
range, it's too soon to even be an accumulation, because
exactly.
if you look at your chart, accumulation starts by price. It's bearish, but it barely falls any lower, and it starts getting almost range bound. And we've nearly got to the price point now. We have not even gone range bound on this time frame to actually say it's over. And people want the bear market to be over quickly. They tend to, it's over now because look at all this dump, but it's not necessarily going to be the case.
And if you look at the Dow theory, if we talk about the concepts of accumulation and distribution, usually what happens is when you exit distribution. So let's say this is a distribution phase up here. So price comes up and it's distribution, breaks down, and then it enters that I think Dow call it markdown phase, but it's basically just a bear market. You break distribution to the downside, and then you enter a markdown phase, so a bear market, and then you enter accumulation. Now, the idea with accumulation from this point of view, and it's the same with Wyckoff as well. He talks about how the Charles Dow talked about the knowledgeable investor. That's basically smart money, right? So the smart money, they enter in accumulation. What happens when price breaks out of this accumulation zone is you enter what is called the public participation phase. And it's called the public participation phase because the smart money, they have already bought. And now they're signaling to the masses that it's time to get in. Now it's time for a bull market. And the bull market starts and it goes into distribution phase again. And the cycle repeats itself over and over again. Now ask yourself, is this the time where the public is uninterested in Bitcoin? If we get accumulation here and then a break above, is it really time for the public to wake up again because they have forgotten about Bitcoin? No, everyone talks about Bitcoin. Everyone talks about, is Bitcoin dead, etc. Down here, everyone was sure that Bitcoin was already dead. Okay.
And going
now,
lower.
Nobody was interested in buying Bitcoin here, but everyone wanted to buy Bitcoin here, and especially up here. And that's because this is distribution. The smart money that bought here in accumulation are selling to the masses, that distributing to everyone else in the distribution phase. And now everyone's stuck with their positions in the bear market. Now, where is the bear market going to end? Well, according to what I see simply in price action and with the cycle theory and the halving dates for Bitcoin, I'm looking at something like this, where we had the distribution range, we had the bear market, accumulation, uptrend, distribution, and now we're in the bear market. And I believe we're about halfway till the bottom, time-wise as well. Might even be longer. But to me, from what I know about technical analysis, yes, this might be a local bottom. We might go up and hit that 55, maybe even 90K region, right? But that to me is going to be a very good opportunity to go into short on Bitcoin. Same thing when we break below 60K, which I think we will eventually. That's going to be a good shorting opportunity. And if you're looking at this, we're talking about a bottom of 30K. That's not really a big move to the downside. If you go from the very top here down to 30K, we're talking about 76%. Now, 76% for Bitcoin, that's a normal bear market. That's a normal bear market. I mean, we're talking about bear markets for Bitcoin lasting, between 75% to 90% to the downside. So I think we're just getting started on this right now. And you talked about the idea of
that you've had just now. I've got that schematic here on my screen. If you can just quickly switch to my screen, then everybody can just get that visual. This is the exact schematic you were talking about.
Yeah, exactly. That's and you know what? That in the middle, right above number 4, that's what we have on Bitcoin. That's what happens in July 2024. That's just perfect example. And then to the right, below trend continuation 4, that's probably what we're getting right now. So and looking at I mean, Bitcoin, if you look at Bitcoin on the weekly or even the monthly and you add it to the log scale, you'll see that we're in a market that is inherently bullish. It's a risk asset that people want to speculate on when the overall global market conditions are in their favor. So they want to be spending money and speculating on an asset, and that's going to be Bitcoin. But it does not happen in a bear market. It simply is not possible through what the human psychology and the mass psychology allows for, right? So we have to be mindful that, but it's a weird situation. It really is. I mean, Bitcoin is in a bear market. Equities are kind of, according to my regime filter, it says that obviously high time frames equities insanely bullish. But we're starting to see some signs of us being in the late phase of the cycle. So it's going to be really interesting to see what happens here in the I don't know, like with AI, it's really fascinating to see, because if it weren't for AI, we would probably be in a recession. But AI is improving at an exponential rate so quickly that we don't really know what the world is going to look like in 2 years, especially not in 5 years. So there's a lot of talks about an AI bubble. Yes, it is probably an AI bubble, but bubbles can last much, much longer than we can remain solvent. So it's going to be interesting to see what happens.
And the one trademark of a bubble, guys, is irrational overvaluation of stuff. And that brings me to, kind of where I'm thinking with a lot of these. I mean, if you look at this chart, just to keep that picture in mind, and then look at this. Look at Ethereum right now. And I'm just going to maximize this and maybe take that away. This is Ethereum from a white point of view. You had a high, you've had a building of a base. And the argument is that, yes, you could see this and go there because, long accumulation effort versus result, long accumulation effort versus result. But in all fairness, that means that where we're at right now, it needs to hold and we need to start climbing up the steps. And then we could argue this. But then the same thing then, the same schematic, the schematic we were looking at right now, means that are we maybe in pretension with the altcoins? Because the valuation is so irrationally disproportionate to where we're at right now that if we're in a bubble, I mean, this is highly speculative, but if that bubble pops, ETH is going to go and do this. Bitcoin goes maybe back down to 30. Let's use your analysis for that. That means ETH is potentially going to go back to $300. There's $800. There's $300. These are all reasonable levels. I mean, it's not unreasonable to think that. We want this to hold. I truly do. I want Ethereum to hold. But in all fairness, that's the reality. You have the same problem with Solana at this stage. Maybe a little bit more bullish than Ethereum. It's not down there at these levels. You've got BNB that's maybe a little bit more. See, there's the positive outlook. Long accumulation made a higher high. Maybe that's happening for the alts. You take things level by level, but at this stage, you do have these charts, and the TA around this is fair and solid based on all the rules. We're just going to have to wait and see.
Yeah, I mean, if Bitcoin is going to 30K, there's no way Ethereum is going to be holding these levels. But I must say that Ethereum is acting in a way that I've never really seen it trade from a market structure perspective. It's trading in a way where, I mean, altcoins as a group asset separated from Bitcoin is just a very, it's a special market. It is very difficult to really get a sense of the altcoin market when Bitcoin is in a bull market. I mean, when crypto, I mean a bear market. I mean, when crypto is in a bull market, everything is easy with altcoins. It's just, it respects the levels, it has good structure. But once we enter a crypto bear market, I feel like altcoins are, it becomes increasingly more difficult to try to predict. And if we're looking at Ethereum, it's basically been staying within a high time frame range forever. It feels like forever.
And the question is, now Wyckoff says this beautifully, I like this, he says, don't try and say a distribution or accumulation. Wait for the breakout on either side of the range, which means it makes it simple. You have a simple rule. You're bearish at the top of a range, you're bullish at the bottom of the range, and then you let the market do the work for you. Basically on this, so the argument is there's going to be a time if the TA gives us the right signals to be bullish. We just don't have it right now. But it doesn't mean that it can't be Ethereum still at 1,900 2 months from now. And then maybe that's the signal. But for where we're at right now, we don't have the signal. This is just price dropping. It's a catch a falling knife moment at the moment. So you could you could be lucky and buy it right now and see the rally. That's the thing. But statistically, if you want to, that's what trading is. We want to try and do something that can be replicated. It means I don't want to gamble at this stage because I can't replicate the outcome. I can just measure the risk. The risk points to, wait for the signal, wait for the momentum to show you there's a bottom, then do be bullish, but understand that that was the time to be bearish. We were at the top of the range. We fell back into that range. You need to question that. Not simple as that.
I also think it's important when we're looking at Ethereum, the difference between the arithmetic scale and the log scale is night and day. It really shows that when you're watching the higher time frames, especially like on the weekly for Ethereum. I can switch over as quickly to my chart here, and I will I'll show you. So what we're looking at here is
for a reason, because my charts are full of drawings, guys.
I try to keep it as clean as possible, but I do like I do think TradingView really it would be nice with maps, like a folder structure up here with the layout. Anyway, this is Ethereum on the arithmetic scale, and what we see is basically it's just like this is the structure that we are in. So we could be watching this as some type of range, and just like you said, I would want to be looking for longs down here and maybe short the rejection here, but definitely short up here, and go long if we break out. But if we go to the log scale, this structure becomes very different. Now we're looking at this, and what I'm seeing now is the whole market structure of Ethereum from 2015. And what is interesting to me is this level down here, and these levels around here. That is quite interesting to me, because if Bitcoin is going to break down and Ethereum is going to break down from that trend and break below this level, then I'm looking at an entry into the sub $400
level,
yeah, and that to me is, I feel like that's what Ethereum needs to do, because right now the chart is telling me that there's just too much indecisive price action here, and the market doesn't really know what to do with Ethereum. But once we come back down here, we can reset sentiment. And we can probably create a pretty good, because right here, this is from a swing trader's perspective and a long-term investing type of perspective, this range for Ethereum, looking at this scale, it doesn't really give me a lot of good risk to reward. But down here, wonderful risk to reward. I mean, an entry into here, you might get we're talking about a 10x. It's crazy, right?
Yeah, that could be very profitable. And
it could be a really profitable trade. So
and the funny thing, I was talking to somebody, this is quite interesting. I've got about 5 minutes left, but he said, this time I'm going to be a Bitcoin maxi. And if you think about the psychology of people, the saying goes as simple: like-minded people, when faced with the same information, will probably come to the same conclusion. So what have we concluded from the cycle? Bitcoin outperformed pretty much everything, except now from the small alts, if you were into those, those pump and dumps for the crazy gambler guys. But for the hodl bag investor guys that's got his his 20 or 10 alts, he didn't really see any profit. And that guy now is saying, next time round, I will be in Bitcoin. Screw these alts because they didn't do anything for me. And that's typically Bitcoin is going to be the one.
See the altcoins start moving, and
the market's going to always. We as traders and fellow community members, you need to think of yourself and what logically looks like the next best move, as the moving average of what everybody else will probably do, because we all are like-minded individuals. That's the reality. And looking at what we have, Bitcoin seems like a good deal, and alts didn't really move, so maybe I need to be in Bitcoin next time around. And that's probably why these charts will flip and turn into accumulation patterns, because people are giving up on them.
Yeah, I think we're going to have some really interesting strong altcoins and strong projects at the end of this bear market that shows, I mean, something like Ethereum. If we come down here and we start actually showing signs of accumulation, very, very good area. All right, Rudo, thanks for joining here today. And it's actually time to wrap this up for myself as well. Time flies when you're having these conversations about prices, technical analysis.
Never enough time.
Yeah, never enough time. All right, guys, make sure that you go and follow Rudo on Twitter. He's the chart artist, I believe. I've also added the link here in the comments section. But you know what? You had to leave, right? But I'm going to cover gold. I see a lot of people are talking about gold here in the comments. So before I wrap this up, let me just check out gold. But I did understand that you had to leave, Rudo. So
I've got 2 more minutes, 2.5 more minutes. So if we can
do 2 more minutes. So gold, obviously, and the next live stream I'm going to show you. I built the tool here to a regime filter, basically talking about what the regimes are in the different markets. And to me, it is quite clear that the regime that we are in for gold and metals is extremely bullish, right? And now the fact that we have driven above, we've broken above 5.1k here for gold. And if we go in, we also see that we have been holding above this level for quite some time. We have a nice candle here on the 4 hour above that level. I mean, anything can happen. Anything can really happen. So there's no certainty here at all. This is just I do see this as a breakout in an uptrend. And when I see a breakout in an uptrend, I feel like I don't really have much of a choice than to go long, because that's how I make money in trading. I see a trend and then I ride that trend. So for gold, I am bullish right now, but that can all shift. This can be a fake out, but that's okay. I'll be stopped out on that one, as if that's a fake out. But I'm looking for a move up to the 5.5k region here for gold. And if we're going into the very low time frame, I think we are seeing we're obviously seeing a lower high. Could also be an M structure forming here. And if we break that one, we have a very good level below at around 5. Could be 5k or like 5.20, something like that. So M structure, maybe breakdown. I don't really care about that from a swing trader's perspective. But if you're an intraday trader, this 5,040 level looks really good for gold. Now, remember, guys, there's more money to be made by trading less. Right. So just because you take a lot of trades doesn't mean you're going to be making a lot of money, right? Because a good trading opportunity doesn't come along very often. This trade right here, I've waited a month for this one. And sometimes it's worth waiting for a good opportunity. And if you take the best opportunities, you'll have higher success in trading. Not financial advice, of course. And I think that sums it up quite nicely.
Beautifully said, guys.
All right, guys. Thanks for joining here today, and we'll see you all next week, same time and same place. Thanks for joining, Rudo, and have a great Monday.
Cheers, guys.